Hey, so let's talk a little bit about FLOKI. And this is impromptu, so I'm sure I'll probably miss a few things and angles and things to look at, but I'll hopefully cover a lot of ground and provide some insight. This is a really good technical setup, and I don't know much about the fundamentals, but the technicals, I like it a lot. I'm hanging out here on TradingView. By the way, we're on the 3-day time frame and Gate.io. That exchange, it appears that this is the most history I could find on this altcoin. But I'm going to hang out in TradingView for a few minutes, and then I want to jump over to another platform that does technical analysis, but specifically Elliott Wave. Let me just share with you what I've got going on here. In trading, patterns are everything. And there's geometric shapes such as like rectangles, triangles. There's also patterns in, say, moving averages. So let me just box this in here a little bit. So we've got a rectangle going on, and there's actually another one I want to share with you. And I've mentioned this in a few of my other videos, but rectangles are typically continuation patterns. And there was a gentleman back in the 1950s. His name was Nicholas Darvis. He's passed away, but he was a professional dancer. And he really put this pattern on the map. And I'll share with you, it's basically a horizontal breakout. By the way, so we've been in this section now for 300 days. So if you're feeling frustrated, if you're a bag holder, frustrated, like what the heck is going on? When price gets range bound into, say, these rectangles, it really does test your patience. So if I just were to extend this over all the way just for a second to illustrate my point, yeah, this makes sense. So if you're wondering why price is hung up over here and going range bound for those 300 days, well, we've got this nice little chunky section over here. So it makes sense. Makes a lot of sense. And then just to validate the strength, this overlay a volume indicator. Yeah, that's nice. So I'm going to bring back this. I'm going to get too messy. Let's just zoom in here. So this looks nice. So I love this volume indicator. So this orange line is the point of control. And what I like is that price wicked it and respected it nicely. And so it's above it. And by the way, this dotted line, if you can see that right there, this current price action at time of recording, which is clearly it's above the point of control. And then you can see this large volume node and price is above that. And so right now it might be a little difficult to see, but we've got this other volume node right here and price is competing with it. But I'll feel really optimistic when price can break above this node. And then we've got the last one in this little wall of worry, which would be this guy. But let me share with you why I'm optimistic. And so I don't think I said this, but these rectangles that I'm going to push this back up there. But these rectangles are some of the most bullish patterns in all of trading. Because if I mentioned, yeah, they're continuation patterns. But there's also another pattern within this pattern. And if you're familiar with the head and shoulders pattern or the inverse head and shoulders pattern, that's what I'm seeing now. The head and shoulders pattern, and in this case, it's an inverse head and shoulders pattern. But these are the absolute number one most bullish pattern in all of trading. So this right here is the left shoulder, and I'll illustrate here in a second. And then this over here is the head, and then, yeah, okay. So here is the left shoulder. This looks clear to me like a left shoulder, and I really do like this in here for the head. And then over here is the right shoulder, and the right shoulder looks to be about a little over halfway complete. And this right here looks to be the bottom of the right shoulder. You remember the point of control? That's why I'm saying right here that I think that the bottom is in, because we've got this whole chunky area in here that is now acting as support, aka also the point of control. So I feel really good that this is the bottom of the right shoulder, and we just now need this price action to finish the right shoulder. So I'm going to get rid of this volume node. Let's take a peek at how long it took for that right shoulder to complete. It was about 87, call it 90 days. And to get a feel for how long the right shoulder will take, again, this is just to get a feel. So if we were to look at 90 days, let's see, let's make this a little more. Yeah. And I'm not saying it's going to take 90 days, but if it were, give you a feel. Yeah, if it was going to take 90 days, kind of what that would look like. And I know I might be off a week or two, but just to give us a feel, let's put on some anchored VWAPs. Okay, yeah, this is interesting. So let me share with you what we got cooking here. So I just placed the anchored VWAP, and for those of you that are, if you're familiar with Brian Shannon, he's a CMT, chartered market technician. He's really put the anchored VWAP on the map. So here is the anchored VWAP from this high right here. And then there's an orange one right there. And then we got this kind of green, olive green, and a lighter green. So let's pull this neckline down. But these up here, and these guys, this is the +2 standard deviation from the anchored VWAP. If you don't use VWAPs, I would highly encourage you to use these. And then here is let's make sure I'm doing this right. Or saying this right. Yeah. Okay. So yeah, so this is the +2 standard deviation. Here's the +3 and the +4. So these really are the last remaining hurdles that price action has to get over. And if we were to measure back up to I slid the neckline down, but I'm going to put the neckline back up to this +1 standard deviation of the VWAP, but this is another 62% to go from where current price action is. And by the way, these will act as overhead resistance, and when price does get above it, what's cool is they will definitely act as support. But to get to the second standard deviation, sorry about that, about another 87% to go. And then once we get back past this guy, we're looking at about another 115%. Sounds like a lot, but in crypto, it's really not. So I'm going to get rid of these guys. I'm going to get rid of that. Now, let's zoom out. This is such a great looking pattern. So I'm not too sure if I mentioned this, but the channels as well as head and shoulders are measured moves. I'm going to slide this neckline up just a little bit. Yeah, that's nice. So if we keep it really simple, if we were just to measure from the top of the channel down to the bottom, the exact same applies on how to play inverse head and shoulders patterns. So this is what's crazy. We've got this channel going range bound, but we've got a channel within a massive channel. So I'll share with you, because that's also a measured move. But as of right now, that's about another 358% to go. So let's do a couple fib. Isn't that interesting? That's so interesting. Show you. So if I mention this, apologies. But what I've found over the years is it's amazing how cryptos and TradFi absolutely love the Fibonacci sequence. And when price does break out of this multi-year neckline, it will find. It's like this acts as a magnet, these golden zones. So it's not a matter of if, again, when price breaks out, but it will find this 1.618. And what did we say? This is turning into a hot mess here. But from where current price is now, that's about another 331% to go. And then if we were to throw in the 2, where's the 2? Yeah. So in cryptos, it's a little different sometimes than TradFi. cryptos can sometimes just blow through the golden zones. So here's the golden zone, right? The 1.618, but they can also find these whole numbers. And this actually makes a lot of sense because I'll share with you what I'm saying. So I'm going to leave that there. But whole numbers, this should be a strong overhead resistance. And that's a 581% move from right now. But then, so that's short term, by the way, short term. So now, dang, that's awesome. So I'm going to get rid of these fibs. And let's look at another set. So what I did was just a simple anchored it at this all-time high. And then I went down here and anchored it there. And then I pulled all the fibs over so we could see it. But these fibs work. If you look at it, price action respects it really nicely throughout the entire history. So I like this a lot. Look at that. That's just perfect. Respect it there. Yeah, this is nice. So with all that being said, remember how I was saying these rectangles are measured moves. So if I just were to go from the neckline down to one of the, not absolute lowest, we'll go down here. And if I swing this up here, yeah, so this helps validate why price eventually find this 1.618 at 0.0042. By the way, 42 is my favorite number. My boys all played baseball, and Jackie Robinson was our hero. That was his number. So this is a good sign. Good luck. Let's measure that. So from current price action, and I'm going to do it. Remember, here's that faint line. But from where we're at now, that's 2,200% move to the 1.618. And I'll tell you, they literally do. They act like magnets. And so let me just share with you what I'm seeing in terms of price action. And this could happen a variety of ways, but I could see, price action right now going range bound as we head into, Q1, January of 2025. I think these next 6 months from January to June are going to be explosive, but we're going to start out slow. But here's what I'm thinking is eventually we're going to find this neckline and it may go sideways again, but eventually it's going to pop. And then the next question is it going to pop and hang out up here and then just go that direction? Just extend this. There's really only one of a few different ways where these breakouts, and this is, by the way, we're stepping into my absolute all-time favorite in terms of patterns, and it's horizontal neckline breakouts. They are extremely reliable and extremely explosive. So again, here's another example of what could happen. We could break out up here and then come back down here, go sideways. It's a little bit of a mess. And then start the journey, back up to that golden zone. So it could be something like that. But do me a favor. When price breaks out of this all-time high neckline, just hang on. Just go grab some popcorn, relax. Even now, this is going to test your patience because there's no telling how long it's going to take for us to get out of this, this range bound. But remember the good news. I really do believe that we are finishing up this right shoulder. And remember the left shoulder, what did we say? It's like 90 days to complete. And I think we're about midway. So we could go sideways for a little bit more, but that's okay. Again, just patience, and everything really does look nice. So I just did a quick pivot away from TradingView, and I want to share with you the Elliott wave counts. I'm a huge fan of Elliott wave counts because it helps us identify the longer term overall trends. So we're still on FLOKI and I'm on Gate.io, so same exchange, and now we're here, the daily time frame. So if you're familiar with it, I love it. And here, let me kind of walk you through it. So we've got a wave 1 right here. It's always an up wave, and then we've got this corrective pattern to finish the 2 wave. So both the 2 and the 4 wave are always corrective. And then the 3rd wave, which ends right here, are always typically the most explosive and typically the longest. but we topped out here, and then it looks like we just finished the 4. So here's the 4th. And this is what's really cool, is we are now starting this 5th wave. Kind of zoom out, just throw this in here, lock in this fib, or fib channel, excuse me. And I got some of these targets already, did this ahead of time. Yeah, so here's another roadmap in terms of what I'm seeing for future pricing. This is not a time-based analysis. So if you're looking down here, don't get too hung up on the dates and the time. But what I'm doing is I'm using the Fibonacci sequence combined with the Elliott wave counts to help identify some of these future price targets. Yeah, again, we're finishing another kind of corrective wave. This before we head into another 3rd wave. Let me just put some of these targets real quick. Yeah, there you go. I would lock that in because I love that a lot. Yeah, and then I would use these fibs right there. Okay. So yeah, we're gonna, right now, we're right here. Okay, so we're in this little mini 3rd wave, right? Remember that inverse head and shoulders pattern? So we're looking to finish that right shoulder. And when price breaks out of that neckline, if you remember that, actually, let's do this real quick. Let's draw that neckline. And this helps validate too, and I'll zoom back out, but this helps validate, how we were talking about where's price action going to go. These wave counts really help validate it. This is a really nice looking pattern. I'm happy. One of my subscribers asked me to do this, and I'm really happy I did. Yeah. So here we are right now. Remember, bottom of the right shoulder, and we're going to head up towards this neckline. And when we do, we break out. We're looking at 0.005 or 0.006 as an example, but that's the 2.618. And the 300 level or the 3 level, that's a whole number, and that should slow this down a little bit. Not long term, but just short term. And so we're looking, somewhere at the 0.0006 to 0.005, and then we're gonna potentially come back down here to the neckline, which is also the 1.618. And this neckline, this multi-year neckline, should act as some nice support from a support resistance flip. And this is totally normal. These pullbacks I was mentioning. And then we're heading back up here. It's hard to tell from a timing perspective. A couple of weeks or months just reach back out to me. But to finish the 5th wave, so remember, here is wave 1, and there's always 5 waves and an impulse. So we've got wave 1, 2, 3, 4, and right now we finished the 4th. We're beginning the early stages of this 5th wave on this journey up here. But right in here, this green shaded area, that's a 0.0012 or a 0.001, somewhere in there. That's the 4, what is that, 4.618 or the 5.618. So I like this a lot, and it should stay right in this nice little channel. And then every time at the end of a 5th wave, every single time, 100% of the time, there's going to be some sort of corrective pattern. So anyways, I think that is a wrap. Yeah, I'd keep this. This is a really nice looking setup and a roadmap for where I think this is going in the first half, Q1, Q2 of 2025. So that's a wrap. Thanks for hanging out with me if you've made it this far. And again, Happy New Year's to you, and feel free to circle back anytime. Cheers.